Hey everybody, welcome back to Admin 290 series. This is Professor Brent Hoover speaking. Today I'm going to go over the A12 assignment. So I'm going to show you quickly how to do that. I know some of you had a few issues with the assignment, but that's alright. The main thing to know is that cash flow is the most important aspect probably of business. Because if you don't have the liquidity to go pay your bills, you're going to be in serious financial distress. I don't care if you have a multitude of assets, but if they aren't liquid, cash is king for a reason. And I just give you some sample numbers in here. You can change them however you feel like. But the important thing is to make sure you use the formulas. Now, one of the first things I wanted to do was to take these title and merge and center. There we go. Now, here's the thing. You're not going to have any sales or cost of goods sold, and your costs are going to be limited to just startup costs for the startup period. Everything else is going to be shifted into month one. But needless to say, we need to go ahead and do the formulas for that. So all your gross profit is essentially your total gross sales minus your total cost of goods sold. Notice, it's given us a formula. You can take it, drag it over, and automatically creates it. And one thing before I forget, take all these numbers, go ahead and put them into an accounting form. That format's much easier. So, alright, the next thing to do is to sum the total monthly expenses. So what I do is take from C13 to C30. There we go. The startup cost in this case would be $17.30. Drag it over, and there we go. Now from there we need to figure out the net profit or loss before taxes. All that is gross profit minus the monthly expenses. There you go. Needless to say, we don't have any profit. we don't have any gross profit, so there's not going to affect the net profit in this case. In this case, we see that we finally don't actually turn a profit on the margin until month 3. Now, here's the thing. We need to figure out the net profit loss after taxes. All it is before taxes, minus the actual income taxes you're paying, and you can just drag it over. It's not going to be any different for this moment, but we can change that going on. We have 2 more calculations to create. The net cash added or subtracted. Needless to say, you take your net profit loss after taxes, you take out all these others. Debt repayment, because you got to go pay back the interest and the principal on any loans. Any capital purchases you make, any money you pay yourself, and then you must add back in proceeds from a loan or just your own money you're putting into the system as equity. And there we go. Drag it over. Needless to say, it works. The final calculation is doing ending cash balance. Take the beginning cash balance, and then you add in the net cash added or subtracted. In that case, what it says is we start off with $5,000 put into the business to start it up. And to going into month 1 of operations, we essentially, after paying all our startup costs, we still have $1,270 on hand. And here's a good thing to look at. Notice what happens to these. These are negative. You never want that. That means you cannot pay your bills. So in order to do that, we need to actually increase our sales. Like I said, this is beauty formulas. You can plug in any different numbers and automatically adjust it. Now let's change this to $700. Notice here, it turned positive, 55, right? In this case, let's make this 800. Notice turn positive. But let's say in this case, we only get $250 in sales for month 3. You would have no cash going into the system going for month 4. The only way to do that is if you can't do it through sales, it means you have to put in your own money. In this case, we would have to put in at least $56. Let's say we put in $100 of our own money just to be to $44. Remember, liquidity is king. You need cash in order to pay your bills. Inventory is hard to liquidate. Now, the final thing to do is actually take month 1. The cash balance beginning of a month must equal the ending cash balance of the previous period. Notice, you can take that and drag it over. And notice it's doing the same thing, it's just looking at D42 instead. And there you go. The rest of these numbers you can really play around with. The income taxes is one thing. On this one, you can take it for different ways. You could be self-employment tax based on this. This one's doing it based on net profit. Here's the thing. If you make over $400 in gross revenue, basically every year you take your gross revenue that you made, all sales, you times it by 92% roughly, and if it's $400 or more, then you're going to owe self-employment tax. And based on your gross sales, they're going to take 15.3% roughly. So we could do something in that case. This one, we'll go ahead and do the formula for the startup period just so we can carry it over. In that case, it would just be your total gross sales times 15.3%. And we could change this. We do pay self-employment tax. There's the formula. Drag it over. There you go. So we ended up in this case paying just on self-employment tax probably a little over $100. The rest of these you can adjust. Now generally your only startup costs are going to be professional fees, actually starting the business. Insurance could be a one-time thing. It could be reoccurring, like we can make 30. Basically errors and emissions insurance. General liability could come in an additional 50. I'll leave that up to you. And the only other really startup costs you would have are capital purchases. In this case, we say we purchased $2,000 worth of equipment. Now, on these, you're supposed to make some charts. So let's do that. All right, I think the first one was actually doing with your gross profit by month. So I select gross profit, hit the control button, because I don't want the startup to show in there. And I can go to 3D bar chart. There we go, that's the first one. Gross profit, I'm going to do gross monthly profit. Alright, there's one. I believe we needed to do one for total expenses per month, so I select that. I'm going to ignore the startup since it's only a monthly thing. Like I said, you can put the startup in there if you like. That's totally your call. We're going to keep it the same consistency. Total monthly expenses. And then you needed to create a pie chart. There's a lot of ways you could do this. I don't care if you just did it through 1 month. In this case, I'll just select this 1 month. Hit the control button. And then I'm going to create a pie chart. I believe it was a 3D pie chart. We can put that down here. Okay. Price. Monthly expenses. And I can put this saying it's month 1. There's a lot of ways you could do it. You could do it for all 3 months in a percentage form. For the sake of this exercise, if you just did this, trust me, you're going to be fine. Alright, the one thing you could do is I suppose you could add some data labels. In that case, let's go to data labels. We probably need to try best fit. Ouch, it gets a little crazy in there. You probably have to adjust these numbers. The beauty about these charts is you can adjust these numbers at any time. So I could say if we bring on an employee part-time, we could say pay him $400. And we got to pay payroll taxes of that. Let's just say, I don't know, just give us a percentage. Notice your chart gets a little crazy in there. That's why the data labels, you can stretch it out. So if not, you can say, hey, I don't have any employees. And it gets a little less crazy. You can say there's no marketing cost involved. Notice it drops every one. Change out no expenses. And it goes from there. So like I said, you came up with these 3 graphs, you've made sure you had all the right formulas in your cash flow statement, you're good. Like I said, this is one of the most important things you can do. It's great because you're looking at to make sure, do you have enough money in cash, really, actual cash on hand in your bank account to actually go pay your bills? Because if not, you're going to be in some trouble. But as long as you're having a positive cash flow, it means your business is going in the right direction. So if you have any other questions, feel free to ask me. If not, see you next time.